Hello, everyone, and welcome to the Public Podcast. I'm your host, Anne Berry, and delighted to welcome today the Chief Executive Officer of PubMatic. We have Rajeev Goel. Rajeev, thank you so much for joining us. Great to have you on.
Thank you, Anne. Great to be with you.
So, Rajeev, PubMatic, you just come out with your Q2 earnings results. Let's go through a couple of things. Let's start with framing your business. If you could just walk us through your business model. Let's start there, where you guys are focusing on the product side, and then let's talk about how that translates into the money and how your earnings went this so far.
Yeah, absolutely. Let's start with who we are. So we're a 16-year-old software company, and we deliver real-time advertising on behalf of publishers. So we help very large publishing organizations like a News Corp, an Axel Springer, or even e-commerce companies like an eBay sell ad space in a fraction of a second on their websites, on their apps, on their CTV streaming devices in a fraction of a second. And so in the time that it takes for a consumer, maybe they're looking up sports scores or, news content, business content, the time it takes them to load that content, we run an auction where tens of thousands of advertisers can bid to place an ad. And the goal of our auction platform is to maximize revenue for the publisher or the content owner so that they can reinvest back into content that consumers love, while also delivering a relevant ad to the consumer. And in terms of scale, we auction over 500 billion ads on a daily basis. So just in the brief minute that we've been talking, we've already auctioned, millions of ads.
And great setting there, Rajeev, for the actual product. Let's talk about how it translates into the results that you just announced. You delivered revenue of about 63.3 million, so you're ahead of guidance.
That's right.
Roughly flat on a year ago. So walk us through that. Talk us through the top line profile that you delivered this year so far.
Yeah, absolutely. So, as you said, we delivered 63 million, just over 63 million of revenue, up about 0.5% year over year. And so I think people are investors are certainly well aware, we're in a period of instability in terms of the overall advertising market. Right. So in the pandemic, we saw a huge increase in the amount of digital advertising as many activities went online, and then as the Fed began to tighten interest rates, 50-year unprecedented kind of increase in rates over the last 12 to 14 months, ad spend growth has slowed significantly, and that's to be expected. Right. What we've seen in other economic cycles is that ad spend growth tends to flatten out, maybe even shrink a little bit, but then it always comes back bigger and better than ever. And so to give a bit of context, digital advertising is about a 2/3 of $1 trillion addressable opportunity, and the programmatic or automated section of that is about $500 billion. So it's a really big and exciting market, and we're really focused on innovation and driving sticky customer relationships while ad spend growth is muted, and then we'll capture share when spend growth reappears.
One area of your revenue base did grow significantly, though, Rajeev. CTV grew over 30% year over year. Just walk us through that particular business line.
Yeah, one of the things that I focus on is making sure that we are, well indexed into the highest growing sectors of digital advertising. And so connected TV, not surprising, is growing at a really rapid rate for us. So obviously people are cutting the cord increasingly, right? So they're moving away from their cable subscriptions. They're accessing streaming subscriptions instead. And more consumers are moving away from a paid subscription or a high-priced paid subscription to an ad-supported model, right? And that's obviously a key way to open up content to more and more consumers. And so that's been a real bright spot for our business. We launched that about 3 years ago. Last year was growing in triple-digit rates year over year. This year in Q2, as you mentioned, over 30% growth. So really strong results. We announced a handful of large new customers like AMC, TiVo, Fox News, and Warner Brothers EMEA.
So you've seen these pockets of green shoots. You've seen some growth despite a tough market, Rajeev. Yet your stock is actually down quite sharply following these earning results. You, as CEO, you spend a lot of your time talking to your institutional investors, I'm sure. What's the feedback you're getting on why there's been such a negative response to this earnings outcome?
Yeah, I think what we've seen generally is that in software and in advertising, there's been a very volatile earnings market. So, in April and May and June, the tech sector of the market ran up pretty significantly, right? So we saw, our stock itself go up 50, 60%
Hmm.
in that period. And many other tech stocks, ran up as well. And I think there's a belief among investors that, hey, there's a soft landing out there that was not the scenario at the beginning of the year, and so that would lead to a reacceleration of ad budgets by the second half of this year. And I think the reality is that the ad market still continues to be choppy. There's no doubt that growth will reaccelerate in advertising budgets, but big company CFOs, they're still holding a little bit tightly to the ad budgets, given there is some uncertainty around the economy. So that's, I think there's a bit of a reaction to, hey, what are the growth rates going to be in the second half of the year? But we feel really confident, particularly in our ability to continue to generate profit. So you saw, 15 million of operating cash flow, over
Hmm.
10 million of free cash flow. So the
Yep.
really outstanding, profit generation, which speaks to the strength of our business model.
Let's unpack a little bit, Rajiv, the sentiment that you just described amongst clients and CEOs who are thinking about the sizes of their advertising budget right now. That's the demand side, right? To your point,
That's
this
right.
anticipation of the soft landing perhaps may impact demand sentiment. Let's talk about the supply side. A risk factor that your team called out was ad supply growth outpacing ad budget growth. Perhaps that happens in this moment, perhaps it's transitory. But overall, there has been a growth in supply. Can you talk to us a little bit about where that has come from?
Yeah, absolutely. So, consumers continue, regardless of the economic environment, they continue to consume content online, right? And they're spending
Yeah.
more and more time online. They're interacting more with video, whether it's long form, CTV and streaming, as we talked about earlier, or
Mm,
maybe more short form video. So there's a lot of supply growth. Demand growth, obviously, as we talked about earlier, is much slower in this current environment, and so that's putting some downward pressure on pricing or CPMS, right? So a number of platforms, Meta, Google, Pinterest, others, they commented, in this last earnings cycle about how they're seeing the CPMS or the pricing of ads
right.
be a bit lower, and that you can imagine that's to be expected, right? If ad budgets are choppy, but consumers continue to consume content, then of course pricing is going to readjust, which is a normalization of the supply and demand dynamics, and then that pricing we would expect to see come back up. There's a long-term secular tailwind in ad pricing, which is that as we apply more data, more machine learning, more data science towards delivering a relevant ad to the consumer, the prices of ads generally have been going up over many years because advertisers are getting a higher return on their ad spend. And when they get that higher return
Mm.
on ad spend, they're willing to spend more to place an ad in front of a consumer. And so that pricing in the near term is a headwind for us, but in the long term is a tailwind.
Let's talk about the destinations for some of these consumer eyeballs too, Rajiv, and where these ads can actually get placed. You talked at the outset about some of your clients, including folks like eBay, for example, and helping those clients um, with sort of ad demonstration. What about companies like Amazon or Walmart that are looking to control, right? Think of those as the destinations for the consumers, and they actually want to control the ad placements within their platform and therefore get the maximum possible return on that to keep a lot of the profits. Does that limit your growth? Does that limit your TAM if you can't tap some of those really big destinations?
So some of these destinations, one of the common characteristics is what's called retail media or commerce media. So
Mm-hmm.
there's a growing trend where e-commerce related companies, and they can be retailers like some of the ones that you mentioned, like a Walmart or a Macy's. They can be ride-hailing apps. They can be
Right,
travel. They can be payment processors. They're getting into the ad business because the margins, are fantastic compared to their core
right.
business. And this is a key area of focus for us. We launched a product just a couple of weeks ago called Convert. A couple of our launch partners are TripAdvisor, Lyft. On the sell side, on the buy side, it's IPG, Dentsu, and MIQ, some of the larger
Mm-hmm.
ad buyers out there. And so we think this is a great opportunity for us to grow our addressable market, and we estimate a roughly $10 billion growth in addressable market. So that commerce opportunity is absolutely a growing ad opportunity for us, and we absolutely plan to tap into that sector.
And then what about on the social media side, Rajiv? Talk to us a little bit, because I think you sit in such an interesting seat to have seen what it has meant for the TikToks to
Yeah.
explode in the way that they have. Or, we've got Threads, which has emerged as a new player in the social media landscape. Again, they are protecting they're fiefdoms, right? They really want to control and get the benefit of the margin for ads placed on those platforms. What do you think about those platforms continuing to take share of consumer attention spans and eyeballs, and how does that impact your business?
Yeah, absolutely. So there's obviously a huge amount of growth in social media. So some of the sites you mentioned, TikTok, YouTube with Shorts and Meta, Reels,
Sure.
Threads,
Yeah.
etc. Some of those are addressable for us. Some are not. They're
Okay.
sometimes referred to as walled gardens,
Yep.
where they control all of the monetization and data within their own platforms. And what we've seen over the last couple of years is that advertisers are shifting monetization outside of the walled gardens. So even though consumers are spending significant time there, advertisers are saying, well, hold on, I've got concerns about advertising in those walled gardens because I don't know where my ad budgets are going.
Mm.
I don't get any data back from them about the performance. So it's a bit of a black box environment. And so there's been a couple of scenarios you might recall with Meta a couple of years ago where there was some news reports of how advertisers' budgets were showing up next to things like unscrupulous content, like jihadist content, for instance, right? And so that type of a scenario, is very problematic, obviously, for major advertisers. They don't want to be supporting that kind of content. And we've seen similar things in the last couple of years with political content, right? So, for some brands, given the polemical nature of elections, increasing, they want to stay away from content like that. And so the open internet, provides a great opportunity where instead of user-generated content, we have professionally created content, right? So this is, studio created content that, has a halo effect for brand advertisers, and those brand advertisers can also get data in and out of the open internet to understand how are their ads performing. And so that's caused over the last couple of years the open internet sector to be growing actually faster than the social media or walled garden sector, and we think
Mm-hmm.
that trend will continue.
Rajeev, we should have put you in charge of branding instead of Twitter being renamed X. It should have been renamed Platform for Polemical Political Content. So, a phrase we're going to borrow from you as we continue to think about that one. Also, this is sort of a question a little out of left field, but really curious to get your perspective on the placement of ads within content, specifically within gaming. Right? If we've seen gaming explode, esports exploding, how are you thinking about PubMatic playing in that space specifically?
Yeah, so gaming is a great opportunity for us. We have many mobile apps, mobile app games that are customers of ours. So
Mm.
it's a significant part of our revenue. And mobile in general, both web and app, is roughly 2/3 of our business. Just to give you a sense of the scale
Right.
of it. And so I think the common misunderstanding around gaming is that it's all teenage boys that are playing, and that really changed in the pandemic. It was not true before, but even less true now, which is that there's people of all genders
Sure.
and age spectrums that are engaged in gaming, and there's obviously a huge variety of games out there, from casual games to more involved games, and so that is a terrific opportunity for brands to get in front of consumers. And the nice thing with gaming is that the ad experience can be a bit what's called interrupt driven, which is maybe you complete a game or you get to a next level, and then there may be a 15-second ad that appears,
Mm.
and then after
Hmm.
that 15 seconds, you get back to the game. And so it's almost a TV-like viewing experience, but of course it's predominantly on a mobile device, right? So a very personalized device. So we think that's a tremendous opportunity, and obviously games, are great content for the consumer, and in many cases they're free, and so ads are really what supports that free game ecosystem. So it's really a win-win from an advertiser, a consumer, and the game developer's perspective.
Let's talk a little bit, Rajiv, about the different kinds of marketing out there. And traditionally, advertising has fallen into lots of different buckets. One is brand advertising. It can be a little bit broader, harder to track, much more about building awareness. And then you've got performance marketing, where there's huge focus on return on investment, really trying to see the measurability of the kinds of campaigns that are being led. What are you seeing in terms of allocation of marketing and advertising dollars between those two, and what does that mean for your business?
Yeah, so you're exactly right. There's kind of a spectrum here of brand versus performance. The reality is that most advertising falls somewhere in between on that spectrum.
Sure.
So it
Yeah.
may be more brand oriented, but there's KPIs around it, key performance indicators or metrics of brand lift or other measurements. And then performance may be, strictly about, how is that ad performing, and not looking at brand engagement or brand lift. Our platform tends to skew more brand centric in terms of advertising. Commerce media would be an area of contrast, which we talked about earlier, where that is
Yeah.
much performance oriented. People want to sell product, right, behind those commerce ads. And what we're seeing right now is that, and it's kind of typical of the economic cycle, the performance advertising is more robust than brand advertising, just given when you're in a tighter ad budget environment.
Yeah.
Of course, people are going to look for hard ROI against their ad budgets. As the economy should improve coming out of the tightening cycle, we would absolutely expect that brand advertising budgets are going to accelerate in growth, and so that's part of the recovery environment that we expect going into the next year or so.
The next year is going to be a particularly interesting one, Rajeev, because we've got two blockbuster events, or one that's historically been a blockbuster. We can debate whether it still is, which is the Paris Olympics are coming up next year. The other one is, of course, the 2024 election. We're about to head this full pelt into the campaigns. What are you expecting to see there?
Yeah, so let's start with the second, with the elections. I expect to see heavy digital ad spending around the election cycle. I think every year or every several years, we've seen the amount of ad spend in aggregate, whether it's digital or otherwise, is increasing at a rapid rate. As each election cycle seems to be higher stakes than the last, and there's more big money pouring in. And then the second shift that we see is that the ad spend is getting more digital, in part because it can be much more targeted, right? So the targeting that's done now is very narrow in terms of location, demographic, issues, candidates, right? So people are very focused on getting a return on that political ad dollar. But at the same time, they have a very narrow window, these campaigns, to spend that budget. And there's no prize for saving the budget, right? So unlike, let's say, a corporation or a brand, an automotive brand, for instance, there's a justification maybe for saving the budget, which is that you have that money in the bank afterwards. There's no justification in politics where it's kind of win or go home. So we're expecting to see significant ad spend from the political cycle. In the last cycle, we saw a couple percentage point growth to the political cycle, and I think we'll see probably something similar to that this time again. On the Olympics front, I think what's interesting there is that an event like the Olympics, it drives obviously a lot of spend related to the Olympics itself, as there's a lot of viewage, but there's also a lot of co-viewing that happens with big sporting events like that. So people are often sitting on their couch, they have the sports event on their TV, but then they usually have a device in their hand, right? A mobile device, like a phone or an iPad, and they're doing other things, right? They may be shopping, they may be, Xing or Twittering about the event, right? So they're doing other things. They may even be working, and so there's a huge ad opportunity around both of those things: the CTV as well as the mobile device.
Interesting, because people are sitting there looking at their second screens.
Exactly, right. People don't focus in on 3 hours of sports anymore. They're distracted and they're doing 5 other things on the side.
Interesting. Let's talk a little bit about how brands have had to pivot a little bit. And we talked about retail, and we talked about commerce and content, and where those have come together. The other big trend that we saw explode, not just with gaming, but more broadly over COVID, was the rise of the creator economy. And we can argue that it's a massively overused term, but there's no denying the fact that individual internet creators, whether it's Mr. Beast and there are others, have just become hugely influential and able to capture enormous numbers of eyeballs. How much is that adding to this ad supply problem, the sort of individualization of platforms that are, creating lots of different destinations for consumers to go to?
Yeah, I mean, the challenge that it creates really is fragmentation of consumption time and
Yeah.
therefore fragmentation of media, right?
Yeah.
And one of the through lines that we saw is that it's really hard to predict consumer behavior. So we think
Mm.
about, COVID and the pandemic, people literally left their office, one day they thought they would maybe come back in a week or two, and they didn't come back for 2 years, right? If they've come back at all. And so their entire paradigm of how they consume content changed, right? So instead of watching on a big screen TV in COVID, everybody in the house had their own device and they're watching their own
Right.
shows, right? In
Right.
many households. So what it showed is I think the benefit and the strength of having an omni-channel platform where we are with consumers with their content consumption on tablets, on mobile devices, on connected TVs, on laptops, on desktop computers, and are able to partner with the content owner as well as with the ad buyers, so the advertisers and the agencies, to help them deliver ads to that consumer wherever they are. And I think the creator economy is, really just another example of, that fragmentation of, where consumers are spending time in a variety of different environments. And that creates a lot of complexity for an advertiser where they have to figure out, okay, how do I get my message in front of the consumer and connect the dots to lead
Mm.
that consumer through a journey if they're, buying something like a car or a home, where it may be a multi-week or multi-month process.
Last question for you, Rajiv, and this could turn into a rabbit hole, so we'll keep it focused. Can't let you go without touching on AI. And you've talked
Sure.
about using very smart algorithms. Your business focuses really much more on the placement of ads as opposed to the creation of the content in those ads. But how is generative AI going to touch your business in a really tangible way? And by tangible, I mean where you can make money out of it.
Yeah. Yeah. So we think there's a couple of very interesting opportunities around generative AI. First, as you said, from a content perspective, which is not an area that we play directly in, many of our
Right.
customers do play in that, right? Which
Yep.
is advertisers that need to create the ads, or the agencies on their behalf, and then publishers that are generating content. And so there's been a number of publishers, that have talked publicly about experimenting with, AI generated content. And so one of
Yep.
the, I think, interesting opportunities there is we could actually see an increase in content consumption if publishers are able to create content that's more relevant for their consumers
Mm.
in a more timely fashion and in a more targeted fashion. So if you compare generative AI to the traditional way, which is an author writes the article, you could for the same price point or maybe even less generate a lot more content and have that content be more hyper targeted for individual audiences. So I think that has great knock on effects for us, which is more content creation, more content consumption, more media to monetize. Now within our own business, we see a couple of interesting opportunities around generative AI. So one is that we are seeing the ability to write code much faster. And about 40-ish% of our employee base is engineers. And
Got
so
it.
when we're experimenting with new products, new applications, rather than taking the time to write code directly from scratch, we can use generative AI to create
Yeah.
proofs of concepts and iterate faster. The other, I think, great opportunity that we see is around automating software testing. So in a
Hmm.
platform like ours, where we're processing hundreds of millions of dollars at any given point in time and billions of ad impressions on a daily basis, we have to really test and quality assure our algorithms in our platform, because a small change, if not correct, could lead to big problems. But with generative AI, we're finding that we can test software in an automated fashion, and that's allowing us to shift our engineering mix towards more feature development engineers rather than testing engineers. So we think we're going to see significant engineering productivity opportunities.
Well, the natural corollary of increased productivity, Rajiv, as we know, is going to be maybe an expectation of higher margins and greater efficiency coming out of your cost base. So we'll have to have you back as you see that unfold to talk about how those trends might be evolving. Rajeev Goel, CEO, PubMatic, thank you very much for joining us. And that's it, folks. Right now on Public Live on our Public podcast. Great to have you join.